The U.S. economy did not grow as fast as initially believed in the first quarter of this year. The government's revised estimate shows it only grew a little more than 1%. So all this information has been laid out for us. Let's get some insight into what it means for the U.S. economy. And for that, we're joined by Ken Kuttner, professor of economics at Williams College. Ken, welcome.
Thanks. Good to be with you.
First off, this downward revision, is it a cause for concern, or is it some indication, look, what the Fed has been trying to do, pump the brakes, seems to be working?
Well, I think you're right. It is a sign that the Fed basically has the economy where it wants it. The revision by itself isn't really a huge warning sign. It's not a big deal in the scheme of things, and it was pretty much in line with consensus.
Okay, but let's go a little bit deeper into that. What do you think the main reasons behind the change are? Because if there's one thing, the market doesn't like to be surprised, and the Dow closing down more than 300 points after this information came out. Do you think that there's a little cause and effect there?
Well, the thing that people are focusing on is, is the part of GDP that consists of consumption spending, and that came in a little softer than expected, a down revision of 0.5 percentage points. And of course, since consumption is the primary, like about 2/3 or 70% of GDP, that's a little bit concerning. But still, it's a small enough revision that there's no need to panic. Residential investment, on the other hand, and fixed investment were both up, counteracting that. And inventory investment, although it was revised down, may say something about an upward revision, an upward movement in inventory investment next quarter.
I think at best, American consumers are skittish about the economy right now. The Biden administration is doing everything it can to say, look, things are going okay. We're going the direction that we need to go. But in the story we heard from Benji Heyer ahead of you, it spelled out that many Americans believe the United States is in a recession. So what do you think the major concerns are out there right now for the American consumer?
Well, that is a baffling question. As it's been noted, the majority of people think that the economy is actually shrinking. This is consistent with some other polls we've seen where people, when asked about their own economic situation, say it's just fine. But when asked about the country's economic situation, they think it's terrible. So economists tend to be baffled about that. Part of it is also I think one hypothesis is that people get beat over the head with the bad news, and so the bad news is salient, and the good news goes unreported. And at the same time, inflation has been very hard on people, and even though inflation has come down, they see the prices are higher and have not come back down. So they're looking at the price level rather than the inflation rate. So all these things, I think, are contributing to a very bad mood. But so long as households keep spending at the same rate, I don't think the economy is in any real danger.
Ken, you point out something very important there, that as long as prices come down. But if you look, I think since 2019, the average, if you combine grocery prices to going out to restaurants, it's gone up more than 25% in that short period of time. And that really affects consumers because they have to eat.
That's exactly right. And even though wages have gone up, for many workers, they haven't gone up by quite as much. And so people are looking at a deterioration in standard of living. And even if they have, then people don't fully realize that, have a hard time discerning exactly what their real wages are doing. And so they still perceive that higher price and perceive that the standard of living has gone down.
It's also hard to convince consumers to buy the high ticket items that do come with a payment that's going to have a higher interest rate right now. I'm going to put you on the spot. What is the Fed going to do the rest of the year?
I think probably they'll stand pat or maybe do one rate cut. I don't see them doing much more than that. I think the consensus is, with which I agree, is that really any significant rate cuts are pretty much off the table at this point.
Well, do you think the consumers do feel good about anything out there right now? I mean, the most recent consumer survey said the job market is doing well.
Yeah, the job market is doing well. I mean, they have the unemployment rate is at historic lows. It'll be interesting to see when the new personal income data come out next. I think it's coming out tomorrow. How that plays out. But again, it's sort of a divergence between the aggregate numbers and households' perceptions.
Well, I can't let you go without asking about the convictions that came down against former President Donald Trump earlier. What do you think that is going to do, A, to the markets when they open up in the morning, and also moving forward? How is the Biden administration going to use this to say, look, we are the best people to run the economy moving forward?
Well, golly, this is way above my pay grade. But the one thing that I would say is that markets and investors generally don't like uncertainty. And so, to the extent that this injects additional uncertainty into an already highly volatile and uncertain situation, I can't believe this would be good for the markets or good for any investment or consumption plans in the long term. But I might be wrong. The situation is so unpredictable and unprecedented that anything could happen.
Well, Ken, that was a diplomatic answer, and we'll continue to monitor this and hope to chat with you again. Thank you again for your insight.
Nice to be with you.